10 a.m. in Lagos, Nigeria. Good morning and welcome to Business Morning here on Channels Television. I'm Ini John Mekwa. We're here to give you updates from the world of business. We'll begin with the House of Representatives. The House has commenced investigation into unclaimed 1.3 trillion naira in Nigerian commercial banks. The chairman of the ad committee set up by the House, Uyemedem, stated that investigation became imperative as the country's budget deficit continues to increase. He mentioned that these deficits are being financed by domestic and foreign loans, which are no longer sustainable.
These deficits are being financed by domestic and foreign loans, which are no longer sustainable as the debts are mounting in the face of dwindling resources. And on the other hand, our nation is faced with multifaceted challenges ranging from insecurity, high rates of unemployment, and hyperinflation, to mention just a few. The core objectives of this committee's assignments is to recover any hanging funds that are currently in the hands of unauthorized persons/individuals and corporate bodies. Review of the Central Bank of Nigeria intervention funds/scheme from year 2000 to 2021 in order to evaluate its impact and also conduct an assessment in its operations.
And here in Lagos, the governor of Lagos State, Babajide Sanwo-Olu, has signed a bill regulating real estate transactions in the state. The bill, which was signed along two other bills at the State House, were passed by the House of Assembly last year, 2021. The governor says that the law to regulate real estate transactions will help to protect the citizens and unsuspecting Lagosians who fall prey to many real estate professionals. He adds that the real estate law will also help players in the sector to know what is expected of them and allow government to track activities within the sector. Well, still talking about real estate now, PwC estimates that Nigeria holds at least between $300 to $900 billion worth of debt capital in residential real estate and agricultural land alone. Now, this is in the face of a deficit of 22 million when it comes to housing. Is there a way to unlock this debt capital? We have the chief economist at PwC Nigeria, Andrew Nevin, joining us now for this conversation. Good morning, Mr. Nevin. Thank you so much for joining us.
Good morning, Edie. It's lovely to be here.
Yeah. So tell us about these findings by PwC. You talk about between $300 to $900 billion in debt capital. What's this about, and where are the debt capitals?
Well, I mean, when we did release this report a few years ago, we were really looking at the fact that Nigeria is a wealthy country. So people keep repeating, Nigeria is poor, Nigeria is poor. We just didn't agree. It's wealthy, but the problem is we have assets that don't produce a return. And a lot of those assets are in real estate, as you say. It's not easy to transact real estate. It's not easy to then monetize it. If you want to sell a piece of land and go open a business, then it's not a simple transaction. So it's tying up all this capital in dead capital. And of course, real estate's the largest capital asset. It's at least 3 to 4 times the size of GDP. So if official GDP is 500 billion, and I'm sure the real GDP is probably closer to 700 billion, there's $2 trillion worth of US dollars worth of real estate, and it's tied up in dead capital. But we have other things that are dead capital. I mean, we have mining resources that we're not able to exploit yet. We have resources like the Ajakuta steel. We have the 3 refineries that suck up a lot of resources from the federal government but don't produce any refined petroleum product. We have the National Stadium, the National Theater. So we're a very wealthy country, but we're not getting a return on these assets.
So the report also says that there's the issue of uncertainty of ownership, which has decreased the value of assets, and then the ability to lend or borrow against it. And these loss forms are also dead capital. What do you think, can be done? I mean, when you mentioned the National Stadium, those are like, really big deals. But when we look at it as in what can be done by individuals, maybe down here by state governments to unlock this debt capital? How do you see this being resolved?
Well, I think it's already happening. I mean, we put out the paper, I think it was 2019 or maybe even 2018. We lose track of time with COVID. But you hear about people talking at every level of government about the concept of dead capital. And you take, for example, you mentioned state governments. I mean, we're very big on development driven at the state level. Kaduna started several years ago working on mapping its real estate, knowing who owns what, and then introducing a tax to be able to raise tax revenue. And so they're in effect unlocking this dead asset. The National Theater, I mean, we know it has tremendous potential. So the CBN took the lead in creating a transaction to be able to involving many of the banks here to renovate and rebuild it. And of course, there's some housing components, but also some arts components. It becomes an arts center for the nation. So, and the Minister of Finance, Budget, and National Planning, she often talks about unlocking dead assets. And every state governor that I've listened to recently is really recognizing that they have tremendous assets and they how to unlock them. So I think, I mean, I hope our paper played a small role in this. I think it's now widely understood that we need to unlock these dead assets, and we're seeing real progress. And I think that, you know, like anything, the progress at the beginning looks slow, but it's really gathering momentum. And if I look particularly in the real estate industry, when we wrote the paper, there wasn't much activity in the real estate industry, but all the issues that we understand need to be solved. So the mortgage issue, the Land Use Act, all of that, people are working on them. And we're actually seeing a lot more activity in the real estate sector than we saw a few years ago. So I think the country is unlocking the dead assets. And you know, it's really great. It's great to see it. I think, again, it needs to happen in every state. So it's not something just for the federal government. Individual governors need to be pushing for it, but it's happening.
Yeah, so what I hear you say is that a lot of this is connected to, you know, the process of, for instance, obtaining CFO, the bureaucracy, the paperwork to legalize some of these assets. Is that what I hear you say?
Yeah, no, absolutely. I mean, you think about real estate transactions. I mean, you need to know who owns a piece of land. And obviously, there's some land that will still be subject, at least in my personal view, to communal ownership and traditional ownership. But there's other land that needs to be under kind of a more modern system of ownership and where it's clear who owns the land, it isn't contested, you're able to easily transfer it. I mean, one of the things that we've advocated for a long time is we'd like to see the land registry put on the blockchain, use that distributed ledger technology to really give certainty to it. And I think there'll be some states that are moving towards that. But that helps a lot. And then, of course, once there's much more certainty around the ownership of the land and the ability to transfer it, then it becomes a living asset, no longer a dead asset. You can borrow against it. You can easily sell it to do something else with the capital. And we'll just have a much more dynamic economy. And of course, we know there's a housing deficit, and it'll help the whole real estate sector grow to be able to fill that housing deficit.
You know, when you talk about land and such landed assets, especially when you go to maybe the rural areas, you have a lot of family titles that are not formal. You know, that you can actually present in paper. And so maybe when you talk about unlocking it or using it for financial transactions, it becomes maybe a challenge. How do you see issues like this being handled? You know, when you get to lands or assets that do not have official records with the government or official records where somebody can work with?
Well, I think the rural land issue and the urban land issue are a little bit different. And I actually think the country should focus for the moment on the urban land issue where land is more valuable. I mean, rural land, we actually know there's a lot of land in this country that is cultivable but not under cultivation. I don't think it's an urgent issue necessarily in rural areas to solve this problem. The value of land, of course, is much higher per hectare in an urban area. So I think we should concentrate on this, on at least the next 5 years on the states. I said Kaduna and even not even, but Lagos, of course, got a long way in kind of ascertaining who owns what land, being able to kind of streamline the COE process. So I would focus on that right now. I really wouldn't worry from a policy perspective on trying to fix this issue or address this issue at the rural areas for the moment.
And then talking about the urban areas, you have a lot of unoccupied apartments, and yet we have this 22 or even more deficit in housing. How do we balance this? If you go to, for instance, the island part of Lagos State, you see a lot of apartments that are not occupied, and yet we still have housing deficit. How do we balance the two scenarios?
Well, I mean, I think the reason we have unoccupied apartments in Ikoyi, so Ikoyi is the most valuable real estate in Nigeria, the most valuable real estate in Lagos, probably perhaps in Africa, and yet you have unoccupied apartments. Why is this happening? I mean, one of the reasons it's happening is because a lot of money that is, let's call dark money or diverted funds are used to buy real estate. And then they're not, the perpetrators of this are not necessarily under pressure to try to make this that well known. They don't necessarily have to have tenants on that, but it's also a reflection of the fact that we have a very uneven distribution of income. So if you're one of the few Nigerians that are very wealthy, you can buy 10 apartments in Akoi. You don't need to occupy them. So both of those issues need to be addressed to do this. They're in a sense collateral damage of these other two issues on there. So I mean, to the extent that we're able to kind of close down the ability to divert public sector funds, they're not going to go into real estate in Akoi. In the sense that we're able to kind of get an income distribution that's more even, then there won't be so many people that can then buy 10 apartments and leave them empty. Because what you want, of course, is you want a vibrant housing market, both to sell apartments and houses and to rent them that works with the market. And if they're empty in a normally functioning market system, if there were empty apartments, the rent would drop because the people that own the apartments want a return on it. But that's not quite working right now. But I'd start with the diversion issue. We have a lot of dark money in this country that owns that sort of real estate that's vacant.
So we see that Lagos State government is making an effort to regulate transactions, in the real estate space. Of course, that's for the state. They signed a bill and to regulate some of the transactions to protect. We know that there's the monthly payment of rent that's coming up in Abuja, and now we have Lagos State. So it seems like the government is now really conscious of the fact that we can actually deal with this deficit, but mostly through rent. But what else do you think the government can put in place? Because even when we hear of low-income housing, a lot of people cannot afford it. And then when you talk to the people in the real estate industry, they tell you it's a cost of construction. So what do you think can be done, to get the low-income housing, for instance, and these efforts of government, both the state and at the federal level, to really bear the fruit that is needed?
Well, we've said for a long time that real estate's the most important sector to drive unemployment and alleviate poverty in the country. I mean, everyone needs a place to live. And when you develop particularly residential real estate, it drives employment. You need plumbers, you need masons, you need electricians, you need laborers. And of course, you then have the building supply companies who are supplying materials for kind of low and middle income housing. They're not importing these materials. That's driving employment here. And of course, if someone buys a home, they want to furnish it over time, and that will drive employment as well. So it's really critical to get it right. But I mean, the reason for the high cost of low and middle income housing are the same reason we have the high cost of everything, because we have a difficult infrastructure, we have too much complexity in the system. So all of these ease of doing business issues, if we continue to work on them and make progress, we're going to also have the benefit in the housing. Now, that said, there's actually a lot more housing activity, building activity, apartment building activity around the country, and is captured in the official statistics. So the NBS, in the past few years, you've seen the real estate sector performing quite poorly in the official statistics. But the reality is, if you go around, you're going to find so many projects going up, offers of housing. Of course, some of it's a little bit difficult because sometimes the developer doesn't deliver on what they say, and that's created another problem. But I wouldn't necessarily, we should have programs around mortgages. We should continue to work on issues around the COE and the Land Use Act to make it better. That's not going to solve the housing deficit on its own. We also need to just have the general ease of doing business that will help bring the prices down for this kind of low and middle income housing. And the other thing I think that's very important is housing is a very local issue, and it really needs to be driven at the state and even at the municipal level and the way it's done. And of course, from a state or municipal level, It's really valuable to get the housing sector right because it's definitely the source of IGR that's the most easily attainable and most easily measurable. If you know who owns a piece of property, you're able to tax that piece of property. If the person can't afford the tax, but it's easily saleable, they can sell it and move to somewhere less expensive. So at a state level, these things all need to come together. But as I say, I've seen, actually, for 5-6 years, I've been talking about the real estate industry, and we've really seen, despite COVID in the last 18 months, the real estate industry start to move. So it shows you the enormous pent-up demand that we have for real estate on that. And if we could just get some ease of doing business progress to help bring some of the costs down, it's going to accelerate.
Yeah, and one of the things you mentioned is mortgage, and it seems it's catching up, but not as popular as when you talk about the Western world.
Yeah, I mean, that's difficult. We have high interest rates. So I had a mortgage. I owned, when I lived in Lagos, I lived in Lucky, and I owned my own property, and I had a mortgage. It was 5 years, and it's very difficult for the average Nigerian to pay off in 5 years. So we need a general reduction in interest rates. I mean, I hope to single digits, but no more than 10 or 11% at least. That brings that down. And we need to extend the tenure of mortgages. 5 years is too short. I mean, it may not be feasible in our environment to have a 25-year mortgage, but certainly I think we could get to 10 or 15-year mortgages. We're on the way to that. So if we had a 10 or 15-year mortgage, some improved ease of doing business, easier titling and transfer and COE procedures. I think those things will all come together to make, continue to kind of push a vibrant housing market. But as I said, I mean, I've really seen, since the time we started to focus on this at PwC 5 years ago, 6 years ago, we really start to see progress in all the issues that I have discussed today. When I discussed 5 or 6 years ago, were not really being talked about and worked on in the country. Now they're all being worked on. I see it at the state level. I see it at the federal government level here in Abuja. So I don't say a lot more confident, but I'm confident now that we're really going to make progress on it. And I said, the demand for housing is so great. People want to own their own house. They want their own property. They want to pay it off. They want to be able to furnish it in the way they want. They don't want to be subject to a landlord. So those demand factors are already there. And if we can just improve some of the supply factors, the sector will continue to grow. But it really has made huge progress in the last 3 years.
And well, we have a lot of private sector participation, at least when we look around at some of the things that real estate stakeholders are doing. Would we say that they are doing enough? Well, I'm talking of private sector participation, because they also come with this high cost that we are talking about.
Well, I don't think housing is something that for the most part can be built by the public sector. I mean, there may be select public sector projects. There may be some low-income projects. I know they're going in some different states. There may be some housing that's built for civil servants, and there's nothing wrong with that. But at least 90% of housing is going to be built by the private sector. As I said, I mean, I think the sector needs to be regulated in the sense that developers shouldn't be able to take upfront funds and then not deliver on what they say. But I mean, this issue, every country in the world faces exactly the same issues. So India, Brazil, Indonesia, countries that are similar to our situation. Many of them, they've worked through it. I mean, if you go to India 20 years ago, I think they were in a similar situation to Nigeria, where titling was difficult, construction was expensive, permitting was difficult, mortgages were non-existent. They've moved on now. You have a very vibrant housing sector. People are getting new houses. You have to have a secondary market for houses there. So they've worked all through those issues. We'll work through those issues as well. And I think in an accelerated time. But I mean, I don't think the solution is to ask the public sector to build the bulk of the houses. As I said, maybe they can build up about 10% of the housing. But beyond that, the private sector is going to be the one who's building the houses. And in every successful economy, the private sector leads the real estate sector.
All right, thank you so much, Andrew Nevin, Chief Economist at PwC Nigeria, for sharing your thoughts on how we can unlock the debt capital in the real estate sector. Thank you so much. Enjoy the rest of your day.
Thank you, Amy.
We'll take a break now. When we come back, we'll head straight to the commodities market update. Do stay with us. It's Business Morning on Channels Television. You're welcome back. Well, oil prices eased today ahead of the resumption of indirect talks between the United States and Iran, which may revive a nuclear deal that could lead to the removal of sanctions on Iranian oil sales, increasing global supplies. Brent crude was down 40 cents at $92.55 a barrel after hitting a 7-year high of 94 yesterday. U.S. West Texas Intermediate crude was also down by a cent to $91.31 a barrel. Both oil contracts have touched recent 7-year tops, supported by strong global demand, ongoing tensions in Eastern Europe, and potential supply disruptions because of cold in the U.S. Talks on reviving the 2015 Iranian nuclear deal, which are taking place in Vienna today after a 10-day pause, and the United States has restored some sanctions waivers, while Iran is demanding a full removal of sanctions and a U.S. guarantee of no further punitive steps. Well, the ease in oil prices, however, could be temporary, while optimism over the U.S.-Iran talks spurred some profit-taking. The price weakness will likely be short-lived as the oil market remains in a supply deficit. Well, to help us connect this to the Nigerian economy, we have Bolanle Agbaje. She's analyst with Financial Derivatives Company, and she joins us to talk about this. Good morning, Bolanle. Good to have you.
Good morning. Good.
So we saw the price go from 94 yesterday to 92. You know, it's such, within how many hours?
Yes.
We have such a movement.
Yeah, so just the talks about, what the U.S. government would actually do regarding the sanctions on Iran brought the prices down temporarily, but I don't think it would be a lasting impact on the prices, because we do have this supply deficit that's still lingering there. And even if, Iran starts to produce oil, or their supply hits the market, I don't think it's enough to close that supply-demand gap.
So this demand is because of the ease of restrictions, return of activities after COVID.
And also the weather.
Yes,
we're experiencing very harsh winters in majority of, the other countries in the world, and that has obviously increased the demand for oil. And also the fact that, oil plays into our daily lives. We fuel our cars, we, use oil to generate heating and all of that. So that has definitely increased the demand for oil. And also the fact that, OPEC is still trying to ramp up supply, but it's still just not enough, and definitely we've been plagued by supply disruptions for the past 2 years now, and I think the oil market has also been affected by
its
this.
Own share.
Yes.
So we see the price of oil, it might hit 100 very soon.
And we're very optimistic. Like if you asked us a few months ago, we're not so optimistic about that, but it seems like it's getting there. And I think the last time that happened was in 2014, so it's great. It's also great for Nigeria, because right now we're looking to, build up our reserves. We need a lot of funding, to fund the next year's budget. And, those are the positives that we could get from it.
Yeah, but unfortunately, I mean, our reserve is down. Now it's even below the $40 billion.
Yes. And also what's conflicting is the fact that, the parallel market rate has also depreciated, not significantly, but marginally as well. But so it calls question, what exactly are we doing with our reserves at the moment? But the decline is not so much. It's something that, I guess the central bank is also looking for ways to, build these reserves.
But which are the ways? I mean, we have the oil. I mean, this is a great one. This should be a great time for Nigeria, but we are not even meeting up with our quota.
Yeah, well, I think they're putting initiatives out there. The last one I recently saw is loans that they're giving to, manufacturers that, they're targeting manufacturers that are investing.
Is it the 100 for 100?
Yes, investing in particular products that we can actually export out of the country. So it's more or less like a longer term, initiative, but I think they're trying what they can do at the moment to, invest in building our reserves in the future.
Yeah, and then the other side of the story is that with the surge in oil prices is an increase in our subsidy, right?
Well, yes, but like the IMF mentioned last year in November, they actually stressed on the fact that we need to remove this.
Yeah, they said it again, I think, yesterday.
Yes, they just because of the petrol scarcity that we're seeing at the moment, they've stressed the fact that the only way to solve this is to remove the subsidy, considering the fact that the government is actually struggling to pay the subsidies, and also the fact that the oil market would actually benefit from a market-based price mechanism, in the sense that with what is going on now, you have the fact that, some people have mentioned the fact that there's bad fuel in the market and all of that. The immediate response would, in ordinary terms, would have been for most of these oil marketers to increase their prices. So once they do that, they can actually regulate how, they adjust their supply within the market. And what then happens? People can still, see this fuel to buy, but just at a higher price. And that would, reduce the queues that we're seeing at the moment. But when you have a situation where they can't actually increase their price, and then they're hoping that, some subsidy payout actually comes into, some of their businesses, they would have definitely, go into hoarding some of the supply that they have and causing disruption in the market.
And here we are hoping that inflation will taper. But I mean, with this, petrol, with the queues and hike in transport fare,
costs,
food inflation,
that the trajectory for inflation will definitely be going up from now. And that has already even started from the month of December.
Wow. And we're hoping that, by the time we get the inflation figure for January, it should have tapered. Since, I know that the one for December was connected to hike in demand because of the festive period.
Yes.
So January should taper.
It should, but with what's going on now, with the fact that, incomes are squeezed and all of that, I don't think our reports will definitely be out soon. We're still focusing on, trying to analyze what the inflation numbers would actually be.
And while you guys are putting that together, do we see any, we've talked a lot about the basket of commodities used to measure inflation, making it more realistic for today.
Yes. Well, as of today, some of these commodity prices have remained flat. For the month of January, we saw small hikes, upwards, downwards with some of the commodities. But as for today, the only price hike that we're seeing in the market would be the price of flour, and it's just marginal. And then you've seen, some decline in prices of like the gari and whatnot. But some of these commodities have remained flat. So that's good. But the fact that, we're still having the security issues, prices have not necessarily gone down to pre-pandemic levels. And that's...
Can they go back to pre-pandemic?
They definitely can if we actually focus on ramping up supply. What would happen is the market would actually adjust itself. In a case where you have an abundance of, say, gari in the market, it makes no sense for any, seller to increase the price of gari, because they will more or less go to the next person that is supplying. That's how the market works. And that's why most economists actually allow the market to control the price of, many goods in the market.
And, mentioning gari just reminds me, I know this was not part of it. Have you bought eggs recently?
Yeah.
I tried it recently and I was shocked.
Yes.
A piece of egg was sold is 18 naira.
Yes, yes. A crate goes for about 2,300 to 2,500 now. I could see it because I buy a crate of eggs almost every 2 weeks, and I could see the price, increasing. And
and I normally would buy a crate, but I tried to buy one and I was told it's 18 naira.
Yes.
And they said it's maize. We go back to the feed mill.
Yes. It's not, it's not a good situation that we're being faced with. But I think, as time goes by and as the economy adjusts, back to where it was, I think most of these prices would actually decline. I think for the price of egg, most of these, sellers are focusing on the fact that they don't have incomes in their pocket. Some of them are trying to, gain as much profit as they can. And, people are buying eggs.
But I was told that, some people are importing maize now to make the feed mill. That's also feeding into the price.
Yes, so the price of the dollar as well has also played into it, which plays into majority of the commodities in the market anyways, because we're heavily dependent on, imports for all these particular raw materials.
Yeah, well, we're talking about squeezed liquidity now. Have we started seeing reactions to the taxing of income tax on treasury bills?
Yes, we're seeing some reactions, but in particular, we know that, most of these corporates are going to, face it, in the sense that some of their profit after tax is going to take a beating when it comes to, the funds that they would have left when they start paying this tax. I understand that the government is looking for ways to generate revenue, and this is obviously some of the measures. But in a case where you have an economy that is booming and growing as it should, I don't think this kind of policy should be a problem. But the fact that, a lot of companies are struggling at the moment, you have the fact that, dollar has increased their cost significantly. You have the fuel that we've just talked about. And then now, the increased tax is going to be a struggling time for
Yeah,
most
because, I mean, some
companies.
people are even saying to feed into the issue of employment.
Yes.
If corporates are squeezed, then they want to reduce their overhead costs.
Exactly.
Even the tax they'll be paying also reduce production.
It's literally the negative multiplier that would play in off from this. But we do hope that the reaction shouldn't be as drastic as, what we're thinking in our head.
Let's just try to be optimistic.
Yes.
What else
but it's also good for the government as well.
Yes, it is good for the government, but we're just talking of, the spillover effect that we could see. What else is happening in the commodity space?
Well, in commodity space, prices, global commodity space, most prices are high. Like in part, we've talked about the fact that, battery prices have also increased significantly just because the raw materials have increased. Like
the emphasis on increase.
The price of lithium, for example, has more than doubled. It has increased by about 569% in the past 2 years. The price of
what's driving that?
Well, they've claimed that, supply disruptions and the fact that, to create a new mine China is one of the biggest producers, but to create a new mine takes about 7 to 10 years. So now that supply is quite squeezed, and the fact that, there's increased demand for the production of electric cars and all of that. And the funny thing about it is we're trying to replace some of these fuel gasoline cars with the electric cars. And then here you now have the price of batteries, the raw materials actually increasing. And this is like the biggest increase in the past 10 years. Wow. The last time, prices were close to this level was in 2010. So from 2020 up until now, we had seen the price of these raw materials, lithium, nickel, decline significantly. And now, all of a sudden,
payback time. All right, Bolale, we have to stop it there. Thank you so much. It was a pleasure having this conversation with you. Thank you for coming and enjoy the rest of your day.
Thank you for having me.
So now let's do an opening call to the market. We have Will Ebong to give us details of how the market went yesterday. Okay, just before Will comes on, we'll just take a breather and we'll be right back. You'll come back now. Let's head to the market. And Will has the details of how we traded yesterday. Hello, Will.
Hello, Ini. Yes, the market continued Friday's bearish sentiment. We thought that we'll see a rebound on Monday, especially with the earnings coming in, with the big numbers. But the equities market started yesterday very on a negative note. And because we saw profit taking on MTN Nigeria, which was down by 0.7%, that caused the 0.16% drop in the all-share index. Now, the all-share index is still settled at the 47,000 level, but we hope that's not going to go lower than that. Now, the month-to-date and the year-to-date gains have also moderated to about 1.2% and 10.5% each. And the volume in the activity sector, we saw volume very high at up by about 26.5% to 285.47 million units, traded at 5.12 billion naira, and all transacted in over 5,300 deals. Now, GTCO was the most traded stock by volume yesterday and by value, and due to a lot of sell pressure on that stock, and this could have been triggered by the news in the market yesterday that GTCO's acquisition of 100% shares in Investment One Pension Managers Limited. Now, we're hoping that today we're going to see how that, goes on, if investors are still going to have negative impact on GTCO stocks and what that's going to imply for the market. Now, sectoral performance was negative as well, but we have Ambrose Omodion on the line to tell us how the market is going, the volatility we're seeing there, and what investors should be doing. Good morning, Ambrose.
Yeah, good morning.
Now, Ambrose, we've seen a lot of earnings-induced volatility, which is expected, and you've been following the trend in the market. What would you say? How would you say investors should position in the market currently?
Yeah, actually, we have seen an increased volatility in the earnings season, even when it's less than what we saw in 2021 and 2022, because it is interesting to invest in earnings season. But at this point, we want to look at those factors that brought the market to where it is. If they are still intact, you don't need to panic when you're seeing kind of volatility. because in any market of the world, when stocks have rallied to a level, they are about to be pulled back, correction, or profit taking, which we have seen in the last two trading sessions like a linger in our market, which should not send panic to anyone that is investing wisely in the market, because these factors are still intact. One, we know that it is the earnings season that brought the market to where it is, and also those high cap stocks that rally during the period to where they are. And that does not mean that the market is over or on an overbought region. But it suggests that many of these stocks that are releasing their earnings are still undervalued. That means we can still trade them as what as investors. If you look at the market, P/E ratio to speed, it's below 8 times, which is around 7.05, and the average dividend yield in the market is around 5.82%. For me, it's good for the market. I mean, the market is still undervalued, that people can also take position. But as far as we're looking at those earnings that are expected to release their corporate action in this month of February, that will change the face of the market. The kind of pullback we're seeing is expected after the market have rallied for almost 6 weeks. That means what you do as an investor now, look at those companies that have released their audited account and see their earnings per share as at 2021 and what they did in 2020 to see if they have surpassed their earnings in full year 2020 and the dividend they paid. That will not give an insight, the kind of dividend you should expect from those companies. Like I said earlier, you see that MTN has grown their dividend payout to 40%, and Vitapro for their financial year grew their dividend payout to 100%. That means if you are looking at stock like Fixing already that have beat his earnings per share with almost 1 naira 48 kobo, and last year he had just 58 kobo, and he paid 25 kobo in 2020. Now that it's 2021, it's having 1 naira 48 kobo. It tells you that they will not pay dividend less than 50 kobo. That is even more than 100% growth in expectation of their dividend. That should tell investors where to put this money. But if you look at stocks like Zenith Bank, Access Bank, UBA, and GTB, that is that their dividend yield is above what we are seeing in the treasury market, in the treasury bill. Today is another primary market option. Then it tells you that investors know that if you are looking at such company that has such yield and we are expecting their full year results, that is where you should put your money, because unless you're a trader like you that have entered earlier, at price rally you make profits yourself. So if you are buying now because of dividend, it is the right time to buy those that have high dividend payout, and that is where you should just position yourself. If you're in that kind of stock, you don't need to panic at all, because this corporate action we're expecting will give market a kind of another kind of trigger, or we call a momentum that will move it up. For me, the market is still very ripe for people to invest wisely. There's no cause for panicking, because most of the stocks are still undervalued, and I think that oil price is already above $92 as at yesterday. They said that this will support the market fundamental and economic fundamental. For me, there's no cause for alarm. Volatility is part and parcel of the market, but when you see volatility, you manage your risk very well. Don't be greedy.
Thank you so much, Ambrose. So what stocks would you say we should watch out for this week? Because investors, I'm sure, are really vying for stocks and saying, which one should I position in, especially now? So which stocks? You mentioned some stocks, but would you be particular about any stocks we should look out for?
Yeah, for me, I think investors should look the way of stock like for dividends. We have different players in the market. We have investors and traders. If you're an investor, you're looking for a company that has high dividend yield to invest. Zenith Bank is one of them that you should look at. Access Bank is one to look at for those that have high dividend yield. Also, we also go to the oil sector. Total is also a good one, has good dividend yield there. Now, this is where you should put your money, especially if you are an investor. But for trader, any stock that is pulling back now, as we're expecting their numbers, it's for you to buy low. And when results come and it goes up, you sell.
Thank you so much, Ambrose. That's Ambrose Omodion, the Chief Research Officer at Invest Data Consulting Limited. Thank you for sharing your insights on the program. So, Ini, we've had it from the experts is telling us to position well for the earnings season, and we're hoping that investors will do that and probably up the market up and get us back to the green level.
Yeah, we're looking forward to that green level. I know it was well celebrated when we hit the 46,000 and all that. So we're certainly looking forward to that again. Thank you so much, Will. So now I will take another break. When we come back, we'll head straight to London. Do stay with us. It's Business Morning on Channels Television. welcome back. You're still watching Business Morning on Channels Television, where pay-as-you-go customers are already going without gas and electricity in greater numbers ahead of the big price rises. That's happening in the United Kingdom. From April, we know that there'll be a new bill to be implemented. But we have Juliana joining us now to tell us more. Hello, Juliana. Good morning.
Good morning, Innie.
So Ofgem Chief Executive is set to face the Business, Energy and Industrial Strategy Committee. It looks like accepting this hike in the energy price requires a lot of conviction.
Absolutely, it does. There is going to be a hearing today. Jonathan Brearley, as you said, the regulator boss, as well as some other industry stakeholders, will be explaining why customers will be facing a £50 hike on their bills each month to pay for the cost of energy, which has seen the collapse of several big firms during this winter. We know that this is a backstory of high gas prices across Europe. That's particularly hit Britain hard. This is the second time in just 8 months the regulator has increased the cap, and that cap has been put in place to protect customers, and now customers will no longer be protected from the 1st of April. And you're right, you know, there are some individuals in this country, families on low incomes, that are suffering, and they have to decide whether or not they want to cook a meal or heat their homes. Hopefully it will get a little bit warmer. The sun has had his hat on the past few days in the UK, but it is still bitterly cold. So we will be waiting the outcome of those panel discussions later today. Last week, the Chancellor Rishi Sunak pretty much underwhelmed opposition members and some union bosses and charities that are looking after these families by saying he's going to be putting forward a £9 billion package to help these families. But some say because we've got a tax rise, he's given in one hand and taking with another. So we'll have to wait and see what the energy boss says later today. But it's pretty much certain that we're all going to be facing higher bills in the next couple of months.
Yeah, well, a lot of people will still be praying that a miracle happens before then. Well, talking of meetings, we had the trade minister at the parliament yesterday to talk about the effort to remove barriers to Australian exports. What sectors of the economy will be benefiting from this trade agreement?
Well, yeah, so we're talking about what happened in Australia. Dan Tehan is, I believe he's the Trade and Tourism Minister of Australia. He was speaking at the Australian Parliament about this UK-Australia free trade deal, which is hoping to eliminate about 99% of tariff barriers on goods such as olive oil, wine, beef, lamb, lots of different goods. And it's just really part of a shift of post-Brexit. Britain and Boris Johnson's government want to shift their focus on pretty lucrative Indo-Pacific region, with Australia being their closest ally in that area. Not only is trade very beneficial, but also security. I believe Ben Wallace, the Defence Secretary, as well as Liz Truss, who was the then Trade Secretary but is now the Foreign Secretary, they are planning to go to Australia to discuss trade, to discuss defence. So yes, so Dan Tehan was updating parliamentarians in Australia yesterday, and also it just comes at a time when Australia have finally said they're going to be opening up their borders to fully vaccinated travellers, because Britain and Australia want to make it easy for their citizens to travel between the both nations.
Yeah, well, thank you so much for that update, Juliana. Well, we'll talk to you later on at 1:30 during Business Incorporated.
Thank you.
Let's go to another market now. It's the crypto market, and Laddie is here. Hello, Laddie.
Hello, Uni. Well, February is shaping up to be a really bullish year for Bitcoin. We've seen Bitcoin break so many resistant levels, broke the 40,000, 42,000, and now eyeing the 45,000 level. Market cap back above $2 trillion. It did break below this, got to about 1.6 trillion a while back, but now we're back above 2 trillion. It's up 3.92% this morning. Volume traded in the total crypto market, $101.64 billion, up about 40%. We're seeing a lot of volume rushing into the market right now, with traders getting their skin into the game. Bitcoin dominance, 41.57%. Price of Bitcoin, $44,735 this morning. It's up 4%. Trying to break that 45,000 level to eye the next level, which will be around 48,000. 24-hour volume traded in Bitcoin, $31.28 billion. See a lot of interesting news coming for Bitcoin, with KPMG adding Bitcoin to the balance sheet. So much good news coming for the crypto market at this time, looking really bullish. See, Ethereum is not left out there. $3,180, up 2.90%. We see Ethereum is holding above the 3,000 level strongly. Traders are looking at the 4,000 level next. Volume traded in Ethereum, $15.96 billion, all green, except Solana on the top also market cap. Let's bring in Rume Ofinao, digital market analyst. Hello, Rume.
Good morning, Laddie.
Good morning, Rume. Well, I'm sure you're in a great mood. The market is looking really good. Flurry of good news coming for the crypto space, with KPMG adding Bitcoin to their balance sheet. How are you seeing this?
It's a year of adoption. It's a year for people to have a rethink about this asset, and it's a welcome development. I think it's a way for everyone to toe this line now, so that things are done right. You know, with all of this exposure for crypto asset coming, this is the need for where government agencies should come with regulations on how it should be done, so it doesn't have issues with government at some point. But I like the fact that other persons are taking all of this move. You know, so there's this increased appetite for institutional investors around Bitcoin, and I know it calls for some due diligence for companies that have not gotten involved in it. But on the other part, I don't know if you saw that, but the Bitcoins that Elon Musk bought then, that actually increased the Bitcoin price about 2021 for about 1.5. It's now about $2 billion.
Wow.
So,
so Elon is in profit, massive profit.
Yeah, exactly. So people should begin to look at how things should be done right. I think about the U.S. is also coming up this week with the hearing on cryptocurrency and stablecoin. Earlier, there's also a publication that came out earlier that says that as a matter of national security, the U.S. is coming up with, Joe Biden's administration is coming up with a framework in no time. And I believe it's a great room for other countries to want to copy and paste, if you ask me.
And you know, we're talking about the correlation between NASDAQ and Bitcoin. It did decouple yesterday, but we see that they're looking to list the Valkyrie Bitcoin mining ETF February 8th. Tell us about this ETF.
Okay, so the ETF, this Valkyrie ETF, it's a very nice one. This is going to be the second, apart from the first one that was actually launched then, I think Pro Share earlier in the US. So the US have, I think it's going to trade today with the ticker WMI. Today Tuesday, I think they should be sleeping now. So when they wake up, it's going to at least be traded in the Nasdaq. And a lot of persons don't understand what the exchange traded funds are. It gives, in this very case, it's for mining, so it's going to give exposure for more investors to invest in that, for them to have profit to involve, to get more engagement with mining. And like I always say, there's a lot of things to be done in this industry, and mining is just one part of it. A lot of Bitcoin has been mined, not forgetting the fact that there's going to be 21 million Bitcoin, and we've had about 18 point something. Very soon now, we'll be closing up typing the opportunity to make some very huge gains in mining. So this is very good. This is a way to go. And I think the last ETF, like I said, has accumulated about $1 billion in assets, you know, when it was listed now. And I believe this is going to make a whole lot different. But others are still coming, because the U.S. has actually proven themselves to be a place where people can take advantage of this innovation, you know, so they don't want to stifle the technology. So I think we need to go. Yeah.
All right, Rume, we'll keep watching for more good news in the market. Everybody's happy right now. Traders are having fun, but remember, very volatile market. Thank you, Rume.
Exactly, very volatile market, but with profits at this time.
All right, Rume, have a nice day. Thank you so much. I see BNB there, $439, up 2.14%. And the biggest laggard for a while now, XRP, no more the laggard, is up 19%, beating all others on this counter. It's at 89 cents, trying to get back above the $1 level. And look at the top 5 gainers there. Top double-digit gains, cheap, back there, and holochain. So it's euphoria right now in this market.
It's a great day, but please, as much as you're enjoying this moment,
oh, yes,
just remember there's
Caution.
profit taking, there's the other side of the market.
Exactly.
So, I mean, let's balance it up and not get too attached to the green and
Don't
then
get too excited.
All right, thank you so much, Ladi.
Thank you.
Well, that's where we draw the curtains on the program for today. Thank you so much for being a part of it, but we'll do it again tomorrow. A better package for you on Wednesday. I'm Ini John Mekwa.